This is Robert Kraft, and I'm coming to you live on SNN Live, and we're at the Growth Capital Expo 2016 in Las Vegas, Nevada. With me right now is Maj Soueidan from GeoInvesting.com, and this is a Wall Street view. Maj, welcome to SNN Live.
Yeah, thanks, Robert. I'm glad to be here and meeting a lot of great companies and hoping to develop some great relationships moving forward.
Thank you so much for coming. So, for our audience that may not remember, but we actually did a podcast episode together. It was one of our educational episodes, and the goal for this interview actually is to continue along that conversation. But before we get into it on what we were talking about in that, which was information arbitrage, what's going on in MicroCap stock market? Can you tell me what's been happening?
Yeah, it's been pretty frustrating for a lot of MicroCap investors over the last several years, actually. And, we're kind of sitting on a low here in terms of MicroCap morale. But I think and I talked about this a couple of years ago on various different podcasts, that it's a process. I call it the thawing of the MicroCap space. And, the carnage of 2008 really destroyed a lot of MicroCap space. A lot of retail investors left the market, institutional investors left the market because they can't invest in these stocks anymore. There's some regulatory constraints that kind of determines what they can and can't do in the space. So you're left with a lot less people investing in the market. And it's not that investors aren't participating in the stock market. They are. When you look at since 2000, the level of investor participation has been pretty constant. But what's changed is, number one, there's more investors are taking more interest in pooled investments like ETFs as opposed to individual stock picking strategies. When you combine that with the lack of interest in MicroCap stocks in general, it's a pretty, you can see why that's going on, the trend of less interest in MicroCap stocks in general, and why it's harder for them to increase in value and reach what they're worth. It takes longer for it to happen. An interesting stat I came across on Twitter, actually, and he posted a picture of a Google search for people searching for the word MicroCap, MicroCaps. And it was a line like this, for the last 10 years. So
that in SEC.com saying exactly what the definition is too.
Absolutely, yes. So, but now when you look at all that, it paints a dire picture, right? But things always change, and I have this saying: reversion to the mean. It always occurs, and and when you combine what's going on in the MicroCap space with the popularity of value investing, which is popularly known as value investing. I call it growth plus value. We'll get into that later. That hasn't been that popular either. So because what you've had happen here is, since 2008, you have one dynamic going on where individual investors don't want to take risk. Okay, so the MicroCaps have a higher perceived level of risk. So they found big cap companies. And the big cap companies, a narrow backstick of them, have led the bull market over the last 7 years. And then when you take this is ironic, another aspect of what's going on is that investors don't want to be exposed to the stock market for a long period of time. So they tend to invest in very speculative investments. They think they're going to pay off real quick, like biotechs, right? And this is very reminiscent of, in a way, dot bomb. In dot bomb, you had a situation where biotechs were leading the market, internet stocks were leading the market, very speculative investments, and then when they fell apart, when it cracked, when it burst, value investing became sexy again.
I wanted to get into that because that's something that I've noticed. And when we talk about the sexiness of value investing coming back, it seems that it's because there's so much more information now available about microcaps that you can actually do the research. You can really dig in. You can go and you can find the SEC filings anywhere. You can read the press releases. You have access to the CEOs, so you can actually get in and start doing it. So, would you say that's part of the trend of why it also might have been going down, where, some of these not so great companies are now kind of going away and doing their own thing or going private, whatever, and more of the quality is coming up because the quality of the investor is also coming up, wouldn't you say?
Well, I think the quality, in order to be investing in higher cap stocks right now, you have to be a very special investor. You have to really dig and know what you're investing in because it takes longer for value to be recognized. So, you have to know what you're looking for and know where to look for it and how to interview management teams. But ironically, I think the amount of information that's coming, it seems like it's a great thing. I call it information overload. And it's almost too much information. Think about it. Now you have so many places to go, you don't know where to look for it. You have conference call transcripts. Things are being said in the conference call transcripts, things are being said in press releases, things are being said in the SEC documents.
Interviews.
Interviews. So it actually makes it a little more confusing, but that's what creates the opportunity of what we talk about information arbitrage. You have a lot of places to go to look where there's disconnects of information between press releases and conference calls, between conference calls and SEC documents. And you need to look at all of them. So, I had thought that more information was going to be better, when the internet was, taken off. But in actuality, it's made it a little more difficult because now you don't know who to listen to. You have a lot of opinions coming from different angles, but the information is there. You just have to know how to get it and where to get it.
So it's a matter of making sure that maybe these management teams are keeping the same consistent message throughout any type of content creation process that they're doing. I mean, really, that's what it comes down to.
Well, they don't, and to tell you the truth, I like it when they don't.
Oh, okay.
Because that's what creates the arb. And it's all public information, which is great. So a CEO might, and our management team might talk in very bland terms in a press release. But you can read the conference call transcript, they say so much more about what's going on, and it's public information. So it's one of the greatest tools an investor has right now to make money in the stock market. You have more information, but people are not all looking in the same places.
So it's a matter of just trial and error, figuring out what information works for you, and that really will help you develop your strategy going forward. Is that what you're trying to say?
Yeah, I mean, look, it's knowing where to find the information and developing a process. KISS, keep it simple, stupid. Once you've defined a complicated process, right, it becomes very simple, and then it becomes possible to find these great opportunities. And then once you have a system, you keep following that system. Whether it's in the microcap space, whether it's big cap space, there's still informational arbitrage opportunities in big caps. In big caps, just have to know, you have to be better at it and quicker at it, finding it. But one of them is believing management teams for what they're saying right away without, when you're on a call with them. A lot of them their level of optimism might be different than your level of optimism.
That's a really good point.
And what an investor's going to think, right? So, one management team might think, hey, as long as I'm growing 5%, that's great.
And also because not necessarily that they're saying anything wrong. It's just they're that.
That's fine.
Yeah.
It's okay. Nothing wrong with that. But companies I have a formula for what I look for, and I think a lot of investors look for, and so that's tough to read what a management team is saying. And the other thing is only depending on one or two sources of information. That's over time I've learned to look at all the sources of information that you have privy to. So that's a very important thing. In the very beginning, I would only focus on one thing at a time, maybe, and then what would happen? I would invest in the company, and I may have lost money in it. But the answer to why I shouldn't have bought the stock was lying somewhere else, and I didn't look there.
So I actually want to go back to a point I previously made because I think, upon hearing a little bit more, I think it might be adjusted to say that, you would agree that maybe there might be more. When you're talking about more optimism, that also can sometimes mean let's be frank here, a little bit more fraud because there's investors that are looking for more speculative companies.
I think you have. You said earlier that maybe there's more quality, invest microcaps out there. But look, I think the actual fraud's gotten worse, in my opinion, since 2008. Well, because again, investors are looking for very speculative, quick returns, and a lot of management teams will give them that story, and you see it a lot now. So we try at GeoInvesting, we really try to do our best to bring all the quality companies to our readership, and we actually try to expose a lot of these companies, so we can bring a cleaner space to microcaps.
And how do you do that? I know you said a little bit earlier about growth plus value as your strategy. So what does that mean?
A lot of investors tend to separate growth plus value. They think growth are all overvalued, sexy tech companies, and the value is all these boring, companies sitting at 52-week lows, and being valued at what their assets are worth, and not what they have no growth potential. But in reality, I think you need to combine the two tenets of growth and value. You can have very boring value companies that have a lot of growth potential if you find them at the right time, and you can have a lot of stereotypical growth companies that if you find them at the right time have a lot of value. When you combine the two together is when you get some of your biggest returns in the market. And Warren Buffett I don't know the quote offhand, but he basically talks about that scenario, like people who separate growth and value. He says they're actually showing their non-expertise in the market, and it's silly to even have that argument. He says, and I agree with that. Peter Lynch was a growth plus value investor, and to me it's the best way to invest. Everybody has their definition of what growth and value is, or what they look for. I have my things I look for in growth and value. So,
what are those things?
Well, I look for so my for example, Peter Lynch would look for companies, I think under a $4 billion market cap.
Boring names.
Well, maybe, but he would look for he was all over the place, but he would invest almost in a lot of things. That's what he was a great in that he could find companies in many different sectors. He PEG ratios I think of less than 1.1, trailing PE ratio of less than 25, forward PE less than 15, and it's a pretty interesting thing to talk about because you brought up here because I did a presentation a couple weeks ago at Toronto about GARP investing, growth at the reasonable price, and Peter Lynch was a GARPer, okay, and so a true GARPer is looking for companies that have modest growth, healthy growth rates, but not too crazy, where there's a lot of risk, where there's a lot of room for disappointment, and they're looking for PE ratios that are low, but not crazy low, where there's a lot of risk hidden in it. So, but we all have our different scenarios. So, Peter Lynch might be looking for companies that are profitable on a trailing and forward basis, possibly. My way of looking at things, I'm trying to find companies where they're at an inflection point in their growth cycle. So my first category is finding stocks that are selling at a very depressed valuation. Okay, they're profitable though. Maybe they're paying a real fat dividend, so they're being valued as a boring value company, a stereotypical value company. But something's going to happen to affect the growth curve, where now it's going to start growing, and the EPS is going to start growing at a very accelerated rate, and then you have an adjustment in the PE ratios. And that's one of my favorite types of finding opportunity. And a lot of what we find it falls in that category. I mean, imagine finding a stock with a dividend of, a yield of 9%, about to grow earnings at 30-40% for the next, couple years, selling at a PE of 15. That's the awesome opportunity to see it. You can find those early before the market does. By doing your research, you get in early. And the other scenario would be one where you have a company that's been losing money for years, so it's being valued as almost like a distress situation. And then through your research, you find out that they're going to again reach an inflection point, maybe because of certain catalysts. It's going to do the same thing, where they're going to see an accelerated rate of growth, and it's going to make the stock look really undervalued. And the other one, which is a little tougher to find, is stocks that are undervalued on their past growth rates and future growth rates, just sitting there. And that's why I love microcaps, because in a big cap, it's harder to find that, right? But in microcap, they're sitting out there not being found, and you can find these opportunities a lot of times. And especially now, when you have the lack of interest in microcap companies, there's a lot of companies that have value on their trailing earnings, as well as future prospects. And that's what I love about the space right now.
So, Maj, what's your background? How did you get into microcap investing?
Well, Peter Lynch was who got me in, and when I read his first book, Went Up on Wall Street. That was the first book I read.
It's my favorite book, too.
Good. I think it's a lot of people's favorite books, right? So, and
my first book, too. I'll say that. Okay.
And when I started applying Peter Lynch's principles early on, in college, about 30 years ago or whatever, maybe, or I gotta remember. I don't do the math. Yesterday, right? So, I was investing in bigger companies, because he would look at companies with a $4 billion market cap or less. Mm-hmm. So, but over time, I started saying, okay, well, I have a better advantage of investing in smaller companies. I didn't do it on purpose. It just happened. It happened by mistake almost. That I started seeing more opportunity for me to get in at these companies, and had easier access to management, which I really liked a lot. Mm-hmm. So that's how I over time, that's how I got into it. and it just became an obsession of mine for many years.
So where can our audience go and find more information about GeoInvesting?
They can go to GeoInvesting.com, and we have you can join our premium service where you get morning email alerts about what stocks we're looking at. It actually calls to action. We call them stocks we're buying or selling. You get, which I love this, it's called Reasons for Tracking. It's an elevator pitch, and maybe 5 to 10 reasons of why we're looking at a company. And it's a great way for an investor to see some opportunities that he might not seen, or he or she, and that he or she can start a research. So we reduce the research time for somebody, and it's great for the intermediate to sophisticated investor. And and then we also have a way to get into our premium portal. If you contribute articles to our website, which is like many websites do that, you can have access to our premium portal, and that part of our business is growing nicely now. We're getting a lot of great ideas from our members. We just had our first multi-bagger recently from one of our members. Nice. Which was great. And so we're very active every day. There's a lot of information flowing. We're about to launch a new product. I just talk about this. It's going to be an earnings screener. Mm-hmm. So what we do, our team, we look at every MicroCap earnings press release, and even the filings, and we summarize those findings in a table. And it's basically a stream. It's a real-time stream. That's what we've used for years. Now we're going to bring it public to our members. And it reports GAAP numbers. It also adjusts the numbers for non-GAAP. It basically will adjust numbers for management trickery. So we let our readers see this is what really is going on in the company. We take snippets of the comments of business outlook in the press release and put it all in that screener. So it's a really great, efficient way for someone basically to take, I always say, to take 6 hours of research time a night, take it and condense it into 20 minutes.
Well, I look forward to seeing it. I hope to be a subscriber one day. And real quick, what's your social media?
Social media is at Maj GeoInvesting is my personal, and then at GeoInvesting.com, or at GeoInvesting actually, would be for GeoInvesting.
My name is Robert Kraft, and I'm coming to you live on SNN Live, and we're here at the Growth Capital Expo 2016 in Las Vegas, Nevada. With me again has been Maj Soueidan from GeoInvesting.com. Maj, thank you so much for coming on.
Thanks so much. I really enjoyed it.